But let's bring in our first guest of the morning. We are lucky enough to be joined by Senator Matthias Corman. He's the Finance Minister of Australia. Senator, thanks very much for joining us. Of course, yesterday we were talking about Joe Hockey's agenda for G20. What's been the reception that you've got at this forum ahead of the G20 about the key points that you've outlined?
Well, it's been a very good reception. People agree with our priority, which is to drive stronger economic growth, stronger job creation, and of course to continue to build a global economy which is as resilient as possible in the event of any future economic shocks.
So what will be the key messages, apart from those outlined by Joe Hockey yesterday, that you'll be taking to the table at G20 over the weekend?
Well, the key message really is that G20 countries need to commit themselves to some hard targets. That too often in these sorts of conferences, the commitments that are made are quite general in nature. We really think it is important to put a number on our target for economic growth, to really lock ourselves into a plan of action which essentially flows from a very firm commitment to an economic growth target.
And what's that target going to be? I know that there's been a lot of talk about it being above 3.7%. How much above that would you like it to be?
Well, I mean, that is a matter for discussion, obviously, over the weekend, and I wouldn't want to preempt the discussions that are to take place. But we do want it to be ambitious. We do want it to be higher than business as usual, obviously. And once that the G20 has locked themselves into a target, obviously we also would like to see member countries follow through with action plans in their domestic economies to make that target happen, to achieve that target.
Okay, Singapore's got a question for you.
Yeah, good morning, Minister. This is Martin. Pleasure to have you with us, and thank you for your time. We can get back to the big picture things, global recovery, EMs, whose problem is it, etc., infrastructure financing in a little bit. I want to talk to you about the economy that you are in charge of, though, Australia. The IMF just came out with a new report on Australia and says this: the Australian economy has performed well relative to many other advanced economies since the global financial crisis. To paraphrase the rest, they are worried about the terms of trade-driven mining investment boom easing away, and the Australian economy shifting more into production and also export. I want to ask you, though, when the IMF comes out with a report like this, does that make you bristle? Is this damning the Australian economy with faint praise?
Well, I mean, it's true that compared to other parts of the world, the Australian economy is doing well. We don't think that we're doing as well as we could. I mean, right now, our economy is growing below trend, and unemployment is rising. And the government is working very hard to turn that around, essentially by focusing on policies to bring down the level of taxation, scrapping things like the carbon tax and the mining tax, bringing down the cost of regulation, improving regulatory certainty, investing in infrastructure. So yes, I mean, we are not in as challenging a position as other parts of the world, but we think that we can do better, and we are very committed to doing better.
Yeah, okay, fair enough. Let's talk about action plans and execution then. One of the points that the IMF is worried about is your terms of trade. The windfall that Australia's enjoyed from the mining boom, that is easing off, although your terms of trade are still historically extremely high. How do you intend to maintain Australia's competitive advantage? And here, let me ask you a pointed, although not fair question. The Australian dollar, where it stands today, are you comfortable with that level?
Well, I mean, at any one point in time, as you're managing an economy, there are things that are under your direct control, and there are things that are not under your direct control. Obviously, global economic conditions are what they are. Part of the reason why we're so keen for the G20 to commit themselves to hard targets for stronger growth is that obviously would be good for Australia too. Now, you always need to make sure that you make every post a winner in relation to those things that you have got direct influence over. And our commitment is to do everything we can to bring down the cost of doing business in Australia by lowering taxes, lowering the regulatory burden, improving regulatory certainty, and so on. Obviously, the value of the Australian dollar is set by the market, as it should be. That will continue to be the case. But it's important for us to be in the best possible, the most competitive possible position in relation to all of the things that we are directly able to influence.
There's been a lot made over the last few weeks, in particular about government assistance into the private sector, given the pullout that we've seen by Toyota, and also, of course, the SPC Ardmona decision as well that the government made to not inject money into that business. Yet we have this Qantas issue as well that's looming with respect to a possible package that the government might put together for Qantas once those results come out next week. Does that send a confusing message, though, to the market that you've said we're going to, focus on not providing assistance, yet there may be some sort of package for Qantas?
Well, it shouldn't be sending a confusing message because the circumstances are quite different. Ours is an economy in transition, and all other things being equal, private sector businesses should run their business as a private sector business. But in relation to Qantas, which was a government-owned enterprise many years ago, which was sold by a previous Australian government, faces some restrictions in a Qantas sale act which are imposed on them by the Parliament, which make it harder for them to compete in what is a very competitive market. So our view is that those restrictions should be removed, but if the Parliament is of the view that those restrictions imposed on Qantas should remain, then obviously that does pose the question what the price of that would be. We haven't made any decisions yet if and how we would provide support to Qantas in those circumstances. Our preference would be for the restrictions on Qantas in the Qantas sale act to be removed.
Okay.
Minister, let me push my luck here and get back to the whole Australian dollar question. Right now it's trading at about 90 even or so. I understand that, yes, it's set by market rates and should be, and honestly this is a question better answered by the head of your central bank, but let me still try. A lot of people are pessimistic about the Australian dollar. They see it as weak as, say, maybe 84. If it were to get there, would you be a happier man?
Well, good try, but what I said before is actually what our view very much is, and that is that the Australian dollar is set by the market. Obviously, it has been quite high in recent years for a range of reasons, high terms of trade, obviously circumstances in other parts of the world. The Australian dollar has had an impact on our international competitiveness, in particular for our manufacturing and all of our exporting industries. The Australian dollar will be what it will be based on what the market determines.
All right, we are out of time. Thanks very much for coming down to chat to us, and we'll let you get back to the forum. That was Senator Matthias Corman, the Finance Minister of Australia. And of course, coming up, we've got a number of big guests throughout the day, but later on Squawk, we're going to have the President of the ADB and also the President of the OECD speaking to us first here. Martin, I'll see you later.